Hey yo, what's poppin' YouTube? I told y'all I'll be back. It's your boy Chyke Investing. Alright, in 2021 we evolving. You can see I got the fresh cut and I got the new setup. Yes sir, got the new camera, new PC, everything. Setup's looking good, trading's looking better. Alright, one more thing before we go into this. Don't call me Chyke. Call me Chyke Investing. When we get to 1 million subscribers, then you can call me Chyke. But for now, that's just disrespect. Just call me Chyke Investing. You get it? All right. Number 2, make sure you hit that like button right now, bro. Hit the like button like right now. I just go like that. And subscribe. Why you gotta hit the like without subscribing? That is like having Oreos with no white thing in the middle, icing. All right. You gotta do both. Like and subscribe. And then you know what? Put the cherry on top. Like this can be like the double fudge Oreo, where you can actually hit the notification bell on the subscribe button so that you get notified every single time I get a video out. All right. Without further ado, let's get right into trading for today. I'm gonna be showing you how to tell what a long-term bias is. I've been getting a lot of comments in my comment section about how people just can't tell which direction to trade in, and I'm gonna solve that problem for you here today. When you're trading, you got to think about the long term. That's how you determine bias. And how does the long term fit with the short term? Okay, now one more important thing to say here is that long-term time frames trump lower time frames. So it means that you need to be trading in the general direction of long term. Right, so that doesn't necessarily, now listen to this is really key. That doesn't necessarily mean that if you see a graph going usually upwards, that you can't short on that particular chart, right, on that currency pair. It just means that you need to understand what's about to happen next in the long term, right? So you can be seeing a graph go like this, up and down, up and down, up and down. It's generally going upwards, right? But there are moments when it goes down, and you can make money on the down and the up, right? When is the next down gonna happen? When's the next up gonna happen, right? In this kind of longer term time frame, and let's say this is like on the weekly, right? If this is a weekly chart, you don't want to wait for 2 weeks later before you start buying again, right? You need to look for shorts. You know what I'm saying? They say this is a weekly chart, right? This diagram right here, right? So you can see it's generally going downwards and needs to retrace to a discounted level. Then you can start shorting, right? That's how you determine, long-term bias. Here's another thing I want to mention, right? When it's generally going upwards, the biggest moves are going to happen on long trades that are buy trades, because you can see the longest strides are in the upward movements, right, compared to the short retracements. So expect a lot more profit when you actually are going with the overall trend, right? But you can have short-term scalps on these short-term pullbacks, right? So that's how you determine a long-term bias. I'm going to use this example on AUDUSD. You also got to take into account that it's not just about trending. It's not just about higher highs, higher lows, higher highs, higher lows, or even lower lows, lower highs, lower lows, lower highs. It's not just that, but you also got to take into account institutional candles, smart money, right? We're trading smart money here, right? As well as OTE. You got to combine all these things together. Okay, so let's just go into the highest time frame. Just make sure everything's okay here. All right, let's just go into the highest time frame. All right, so how do you determine your bias on your next trade? Right, how do you determine your bias? Let's say you're trading OTE, optimal trade entry, or optimal time entry, or optimal trade entry, right? You can see that this graph is all over the place. Which direction should you generally be looking at? It takes a lot of analysis. What I would recommend is going back and watching all my videos, and over time, you're gonna start realizing, oh wow, this is how to do it, okay? So let's just analyze this from the long-term time frame. I like to start in the weekly, okay? Now you have general lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? You got a little bit of a trend movement, right? Not that strong enough for you to, determine whether or not it's going to start going bullish, because you can see it started tanking all over, right? Creating more lower lows and lower highs, right? If you actually zoom out, you can see that this liquidity, this was a liquidity take right here. This grabbed liquidity, right? Here is a major level of support, and people are going to have buy orders over here, because around this level, let's just draw a horizontal ray right here. Below this level right here, there's going to be buy orders, right? People are going to put buy orders because they don't expect it to go much lower than here. Maybe they'll set a nice, comfortable, a couple pips below here, right? And get the bounce off. However, we see it significantly shoot past. What are the banks doing here, right? They're triggering these buy stop losses. What does that force these people to do? When you have a buy stop, you're entering into a buy position, but when it hits your stop loss, that's forcing you to sell back that position, which now allows the banks to buy the position you just sold to them. Because in the market, you have a seller and you have a buyer. There's someone who's going to sell you something if you want to buy it. So the banks are buying what you just sold to them through your stop loss. And so that gives them a lot of liquidity. That's why we call it a liquidity grab, right? That's why they now have a lot of liquidity to go in the opposite direction, right? You can also think about it from the idea of, let's say, a sell order, right? Let's say people believe that once it hits once past this point and it keeps going down, they're gonna keep making money. So they're triggering all these sell orders. But yeah, now guess what? That means the banks can buy from what you're selling to them because you're triggering a sell order, right? So you can see how it's now moving in the opposite direction. And not only did we have this liquidity grab, but we had a break of this trend line, right? We had a break of this trend line, and we had a retracement off the break. So usually when you break past the trend line, sometimes it's a liquidity grab because people will have their buy stops here, and maybe they want to start selling off when people are buying in, right? But you can see that it broke past the trend line and then retraced a little bit and then took off again. That's how you know it's really going in in a different direction. That's how you know it's really reversing. Let's get all these confusing things off the screen here, right? But yeah, we're gonna leave that there. That's an imbalance. We actually want to take care of that. I'm gonna leave that there as well. Okay, let's move all this humbug as well, because there's something really important I want to show you here. Something super important, right? So now you're overall in a buy direction, right? You want to be generally looking for buys right now, but that doesn't necessarily mean you can't find shorts, right? So where was our target? I talked about this in a couple of videos ago in AUDUSD. When this broke off, where's our target? Our target was above these highs right here, because these look like equal highs, right? Where liquidity is resting above here, right? You got money resting above this point, right? And so generally I like to believe that this chart is, this is acting as a magnet, attracting, the algorithms to push AUDUSD up here so they can grab the liquidity up here, right? At the very least. But look at this institutional candle here, right here, right? Let's put it at the open of that institutional candle. Now you can see that this is an institutional candle for two reasons. One is because you have this nice bull candle followed by an extreme sell-off, right? That is bank action, right? Bank action right here, right? You can even see it here over here too. Look at this, what the hell is this doing here? And an incredible shoot up in buys. That's not you and I. That's not retail investors. Banks have enough money to do that, right? Only people with enough money can push an hour candle or a candlestick this crazy, right? And so you have this sell-off immediately off this bull candle, incredibly looking bull candle, right? And then you can see that this candle right here actually is above this one. So that means they grabbed liquidity above this last high point and then sold off, right? You can see that happening. Great. Now, because of that sell-off from this institutional candle, it needs to get mitigated, right? It needs to get mitigated. They need to break even on their orders. And so even though it sells off, right, it needs to come back up to this exact point, to the open of the candle where the buying started, right? it needs to mitigate that particular position. And that's why you can see over here, the exact line that I just drew is exactly where this point touched. Ain't that a doozy? Chyke was right. That was my name last year. Chyke investing was right. And so now we've seen that it's mitigating to this candle. What's your bias now? Your bias, obviously, in the next, just for a day or two, next couple of days, while you've seen that happen, it's obvious that there is a sell-off triggered from that mitigation. And so even though we're in a long-term, time frame, we're actually now looking towards a shorter term short play. Like, even though in the long-term time frame we're in a buy, right? It's going up. But in the shorter time frame, because of this mitigation for the next couple of days, this is a weekly chart. So, when you get down to smaller charts in the next couple of days, you should see a sell-off. And you want to get in on that sell-off, okay? And so, we could just look at that. So beautiful, right? Where do I expect it, to stop? If it goes below this point, we'll probably be looking at shorts for a while. Probably see, it retrace all the way back down from this point, maybe all the way up to here, right? You can see it come down at these levels, probably fill out this this candle, the open of this candlestick, right? That took out the liquidity that rested under here, right? Smart money play here, right? You can see that this candle, these range of candlesticks, starting with this big sell-off right here. Zoom in. You could see it come all the way back down to there if it surpasses this level. If it doesn't surpass this level, we'll probably continue to go up. You can see that if you go from this low all the way up here, we've already passed 79 level. So it's pretty likely that we'll probably just continue to see a little bit of a sell-off in recent times, but who knows? Anything can happen, right? Okay. There's also, I believe on the 4 hour, or actually, sorry, on the weekly, in this highlighted area, we actually do have, right? We do have an imbalance here. Okay. So you might see it come all the way back down to fill this imbalance. So you got to take these things into consideration. So we just came off this institutional candle. We have an imbalance down here. We also have another institutional candle that has not been mitigated yet and took out these lows, right? And you have an imbalance, right? You have an institutional candle here that's sold and bought, right? It sold off and bought, right? Quick sell and huge buy off. That's institutional candle. That's a bank. Right? It's got to get mitigated to break even on their orders. And you got this imbalance, right? And we just came off that over institutional candle that was over on the left. And so it's looking more short. It's looking more sell-off than it is buy and bull, right? And so I would only be looking for optimal trade entries, right? That's going to be for shorts. And so we can see if anything happened today. That's not the whole point of this video. I kind of just wanted to tell you how to determine long-term bias, but we can map out today and see if we got any opportunities. Let's just probably highlight these 2 points. Let's go into the 4 hour. Okay, nothing too fancy out here. You can see this flag, this kind of flag that we got here, right? Spend it. Broke off right here. You can see that we're obviously short, right? We can go over to 5 minute straight from there. And I'm not sure when. Yeah, perfect, great, perfect OT opportunity. Fortunately, I didn't trade this morning, so couldn't catch this. But you can see my analysis. It's quite perfect, right? You go from this last high all the way down to this low right here. Retrace all the way into the 79 level. And you got sell-off from there. Perfect OTE opportunity within 8:30 to 11, right? New York Standard Time. From the last high to the low, right? Retrace, and you got this pullback. Led to another sell-off. Great OTE opportunity. Fortunately, it's kind of curving back up, and so that's why you have to practice risk management. It doesn't always work out, but at least more times out of not, you'll break even and not lose money. This is a strategy that is really, really, really profitable. I have a lot of videos on it. I'll probably link a video to this that'll detail you how to trade OTE if you're trying to learn how to do that. It's also not my theory. This is actually done by ICT, so you can find more videos on his channel. I want to give him full credit and say that in the video. But yeah, so this is pretty much all that I have. So when you start your sell position, let's say you had your order here and your stop loss is up here, you got into profit, and it's nearing end of the session, I would actually just move your position into break even. Just because you never know what's going to happen when liquidity dries up, and you might get big spikes depending on who throws in money or not. It's less predictable after the times between 8:30 and 11. So you want to start practicing risk management. But yeah, that's pretty much all that I have for you guys today. Thank you so much for following Chyke Investing. I'm trying to get our subscribership up. Please share these videos with other people who you think are doing smart money OTE. We'll be doing some giveaways soon this year. We are evolving in 2021 now. We're evolving. And so this channel is going to evolve too. All right, guys. Peace out.